Hello everyone and good afternoon from Sydney as we move into the London Open. There was a lot of interest today, of course, in the US futures stock trading because of what happened last night in the US, and we've addressed that in our daily report. The outlook at the moment doesn't look good for the futures market. There's been several attempts at a rally, but each rally seems to be faded rather quickly. So I would suggest going into Europe, there's going to be a renewed and fresh vulnerability to the downside. In Australia, we saw unemployment data come out today, which created a little bit of energy, if you like, to the upside momentarily for both Australian stocks and for the Australian dollar. Again, those rallies have been sort of sold back down, not necessarily to their previous lows, but certainly the market looks heavy there as well. The unemployment numbers, 5.1% for Australia, strong jobs growth, did look very good. And if it wasn't for what happened yesterday in New York and with the Fed's comments, probably this data today would have seen stocks and the Australian dollar screaming higher. But instead, the interpretation, of course, flowing on from the Fed being increasingly mindful of the inflation risk and the need to reduce stimulus moving forward, means that people just saw that strong jobs data in Australia as a sign that perhaps the RBA will have to follow suit and be, if you like, unwinding its stimulus, raising rates, doing its own form of tapering a little bit sooner than most people had expected. So going into London Open, I would suggest the main thing to watch is probably still some general strength in the US dollar, but most importantly, equities could be at risk of a fresh, if you like, European attempt at unwinding some of those long portfolio positions that they have just like the rest of the world. Hope you have a good day, good rest of day and an evening. Thank you.